Good evening, viewers. Good evening, traders, and happy weekend. My name is Lucky from Data Point Forex Academy. This evening, I will be discussing on synthetic, simple technical trading on how you can simplify technical analysis in trading synthetic. Synthetic is one of the indices that are more of algorithm, just like Forex, but the same thing is the same technical analysis works for all, but there are some technical analysis you will put in place that can easily help in getting entries and exit. So for us to continue this trade, do likes and share and comment on our videos so that whenever we share this type of content next time, you have access to most of our learnings and content we provide at this channel. So let's dive into the channels straight on our trading view. We go to, for us to do that, we have to go to charts, chart.deriv.com/deriv. Then you click enter. This is the platform where you can trade deriv effectively. Once again, it's chart.deriv.com. You can see it at the bar here. So what I normally do is that this deriv chart is not like trading view where you can actually like gold, where you do analysis like a gold as we have it here. Whenever you come back, you have all what you have on your screen. It's not like that. So I'll teach you how you can get that effectively, so that some people do go to MetaTrader 5 or MetaTrader 4 to take their analysis. For me, it's not really the best because you can't get more view and more space to do your analysis clearer the way you have it on chart.deriv. So now let's dive into it straight. We go to the chart.deriv.com/deriv. Now what I normally do is to, let's say for instance, these are the safe pitch and we have arrow 25. Let's say for instance we want to trade volatility, let's just say 21s for instance. This is volatility 21s. Because I'm using this as an example, it's not on part of my chart. I'm not sure it's part of my chart I've saved, whether it's there or not, but no, it's not an issue. Now, what we do here is we go to 24 hours because this chart actually starts for 24 hours and we're going to be using 15 minutes or 30 minutes as our entry. But if it's going to be on swing trade, we will be using 1 hour or 4 hours. But for this, because we are starting our chart top-down analysis at this 24 hours, which is 1 day, we'll be considering within 30 minutes and 15 minutes. But for a quick entry, we'll be using 15 minutes on this because it's a very volatile pairs and you want to see what you do and how it goes to your take profit or your stop loss as quick as possible. Now let's go back to our top-down analysis. What we do on top-down analysis is we consider the resistance and support. Now let's look at this. You click on your horizontal line, you take your resistance, then we also come back here, you click on the same horizontal line, you take your support. Now you have gotten your support and resistance. Now let's check for the direction of the trade. At these 24 hours, we've actually gotten to a resistance. We have one, okay, let me use demonstrator bar. We have a resistance somewhere here, we have a resistance here, and here we have a resistance, and this market has moved on this zone to so it has actually started from here, higher, low, higher, high, higher, low, higher, high, then higher, low, then higher, high. Now it comes back to higher, low, it also forms higher, high, comes back to higher, low. We expect this market to possibly come back to higher, high before changing a direction down, possibly here is our good entry now, where we'll be having a higher low downward again. Now, what do we need to do? We've gotten a triple top, and whenever we have a double top, we have a double top here, 1, 2, and that was a sell. And at this level, this will have given us a very good sell because it's a double top. We'll have just taken it to the first low, then we take it little high above the last high, then we mark it here. That gives us a very clear direction. But we are not going to take our trade on this 4-hour, on this 24-hour or 1 day. What do? We delete this. What we did on this higher low and higher high, higher low, higher high, higher low, higher high is for us to get a direction. Shows that the market was on an uptrend, but right now is resisting, and at this level we have what we call a ranging market between this zone down to this zone. Now this ranging market also is a point we need to look at. Now what is this market like? Anytime this market gets to this zone, there may be a possible way that it will go back to the upper zone again. Whenever it gets here, it's come back here. But where do we take our entry? When we market breaks this and possible have a retracement, then we can look downward for a sell. Or alternatively, when the market breaks this last high, let's say the market breaks this go above the last high, then return back, then we look for more high. The only challenge we have on this chart is that the market does not really have weekly or monthly for us to check the all-time high and all that. But technically, you need to be very careful and trade what you see at this level. Now let's go back to 4 hours. On our 4 hours, let's remove this. Now we remove all this so that we can get a clearer direction. Now we're on the 4 hours. On these 4 hours, we find out that the market was also still ranging, not really giving us any direction at this moment. So we are still on this range in between. We're still on this range in between this zone. So what we'll be looking at is we expect this market to come back to this higher, the high zone of this, which is the resistance level. So market must come and take off this zone. Look at this. This is the resistance. This is the resistance. We expect market to come back here. If it comes back, we might likely enter here for a sell. If not, we watch again. Let's see, maybe market is coming to retest the last high. If not, we might go into for a sell at this zone somewhere here. So that is what we'll be looking at. But we go back to 30 minutes. Let's see what 30 minutes is giving us. So at this level, we have 30 minutes is still very far from the resistance. So remember, we still have our resistance above, which shows that the market is. So this is where we marked our internal point of interest, which we identify. So market is also going to navigate his way back to this point of interest at this zone, right? He will continue to touch this trend line, then move up, possible comeback. Then where we are going to look at is this zone for us to take our sell. That is direction for our good sell for this market. Now, how do we actually keep this? To save this trade, we're going to go back to save. We'll click on save. Then you look at what pair are you trading? V31X. That is this pair. And today is Sunday, or sorry, Saturday. We could call it Saturday V301S, then you save. Why? The essence of this saving is because we want a situation where we will come back tomorrow, you just go to your savings, you go to your open, then you check for Saturday. These are the ones I've saved before. Friday V10 1S, Wednesday V50, Wednesday V75. This makes me to recall back what pair I'm actually looking at. Now this is the current one. Then we click on this. You have to mark it so that it can be of a so that is how the market is being calculated. So that is how we calculate, we do our savings for under volatility or synthetic indices on deriv charts, because you can actually just work it and you come back, you won't have access to that chart again. So that is how that is done. Now let's look at another pair. We've just explained that we were expecting more of a sell on that level because on the higher time frame, it's telling us that it's a sell. Now let's check for, let's use the one I have V50. Let's look at V50. Now on this V50, actually marked a trade early this morning. I'm actually on this trade already. As you can see, this trade has already moved for with some let me check. It has moved about 1.8% of the pip already. So that this is about 3 hours ago I entered this trade and it's going very well. Okay, now let's look at the overall direction, how I arrived on this trade. This is V50. Now remember, the volatility 50 and V31S, they are different. The anything you have 1S is more volatile than when you have the normal 50 index. They are not the same thing. So if you check this, you have volatility 50 index. The one we did analysis earlier is quite different. If you check this, you have 1HZ30V. That means volatility 30 1X index. Whenever you have 1S index and 30, they are not the same thing. They could be different. You can also see, okay, let's check if we have 50 on this, 51S. Yeah, we have it. Now check this. What we have here is volatility 51S index. And check the market range. You have 300,000, 290, 260, 280, 240, 220. This is what you use easily to identify that, oh, you are not in the same trade with the other pair. Now let's go back to normal volatility 50. You find out that you have different thing entirely. Normal volatility 50. You remember we're having 300, 290, 280 at the market range. Now check this. This is giving you 90 point something, 91, 92, 93. Where you compare the V1S is 300 and all that. So they are very, very volatile. Compare that range with this range, what you are seeing. You find out that it's almost times 3 of what the market movement is. So that is how you know the difference. 1S is different from V50. V50 is different from V51S. So whenever you are taking a synthetic trade, always make sure you have a very clear direction of what pair you are trading, and the lot size are also differ. They are not the same because the movements are quite different. And at the same time, you need to also be careful because I had a mistake some time ago where I wanted to trade, I think it was 10 volatility 10. I mistakenly went to my MetaTrader 5 and I click on 10 VS and I entered. Before I know it, the market blew off my account because they are not on the same range. In fact, I could not even enter my stop loss because what I was seeing on V10 was even for what I was seeing there. Before I could know it, the volatility was so high and took off my market, and it was a small account. So this is how most of these things works, and they are very, very delicate, and you need to be very, very extra careful in what you do when it comes to trading volatility pairs. Now let's look at the V50. Now we go back to our daily again, check our daily analysis. Now let's remove everything on this. I don't mind whether I'm trading this, I have a lot of chart here. Now this gives us a direction. Let's look at it. We have a very long direction. Now for us to get that clearly, let's get our resistance here. Let's This has been a very long downtrend. Now let's mark our support. So we have gotten the direction of resistance and support. Now let's look at 4 hours. The overall direction is still a sell. Still a sell. So we have this structure base, internal resistance. We also have internal support, which the market is already respecting. But we need to be very extra careful here because the overall direction is still a sell. So we can't actually decide on what to do here. The buy I was just because I needed to scalp it in the short while. Now, if we're also going to use a trend, so we have this as our internal trend. So at this level, that was the reason why I took a buy at this point, because the market has shows that is heading back to up to go and resist this internal high. So we just go below, little below this, which is 1.7. Then we go for 143, which is 142.7 is okay. So remember, I told you we're going to be saving this. By the time you save it, you can easily come back to it next time when you need to check. If you don't save it, this chart will disappear once you close this page. So that is how it works. So it's always very good that you save as you walk along. Now, we'll be looking at this market to come back to resist this, then possible it will drop. But we have to make sure you set your stop loss very carefully and your take profit carefully, because we have first resistance here, second resistance. We want this market to come back here. If I'm going to manage this trade, I may likely just exit somewhere here. I just exit somewhere here. At that point, I will be taking one for one. I think that is the right, which is not too good, but that is going to be my first take profit. So in a safer way, 142 is always the best. Then we take that, but we monitor it at the first take profit before we break even. Then we move forward to a higher take profit above. But this is how volatility 50 will go if we are to take this trade. Now let's look at one other more pair. For those, I always advise you trade. If you can see the number of trade I took here, and they are not really much. I do 10, 25, and 50. Now let's look at 25. I love 25 so much. This is volatility 25. Now let's just remove all the chart we have here. Now, so when we remove this, we mark our resistance. Remember, I always mark resistance first, right? Or that should be our support because this is a downtrend. Then we come back and mark our support or resistance, whichever way you want to call it, because the market is coming uh, to touch this. This is where we're going to take our entry because we have first touch, second touch, third touch. We expect the other touch here. If for instance the touch does not work, it breaks it because our moving average is still telling us it's downward. Sometimes I use this as conferences to check my entry. So I just check it, then I remove it. Now we go back to 4 hours. 4 hours is still more on the downtrend. What do we need to do on 4 hours? We mark our inner zone where we will be looking at exit or entry, right? So we have this marked. Remember, always save all your changes so that it can be effected on your chart, right? So any change you make, you just click on save so that whenever you come back tomorrow, next time, you will get it. Now, this market for us is a clear direction that is going to get to this point. What do we need to do? We go back to 1 hour. We might use 1 hour as our entry level for a buy if we're going to buy this market. So we have to wait till the market get to this zone for us to take a buy, possible back up here. Or we look at the most point of interest within the inner zone to take our profit. This is what we will be looking at for volatility 25. So remember I told you that we have V10, V50, V25, V50 is my very good favorite pair when it comes to synthetic indices. So we have a lot of video we have made on this type of analysis for you to be able to do this clearly and understand how volatility works. Just click on our channel, likes and share because we have a lot of videos we have made on this system like this so that you can always follow us in what we do. So for me, it's a good day, it's a good weekend. Continue to believe in your strategy, believe in yourself, and do the needful by practicing and backtesting all the time so that you won't miss out in any trade. And remember, I said don't trade every pairs that you see on the chart. It's not the best. Just pick two, three and master it, you will be good. And remember, the volatility of synthetic is very, very much that you need to be conscious in your risk management. So as we do this, we hope and pray that your learning for this video will give you a better opportunity for a great success and great profit for the week. Do enjoy your weekend. Thank you and God bless.